assets. Now, let's look at our liabilities. We can see that the Visa account has increased dramatically, which could be a symptom of poor cash flow. Credit card accounts need to be cleared in full each month to avoid high interest costs. If you're unable to pay your credit cards each month, it's important that you talk to us about how to restructure your finances to avoid high interest costs. The bank overdraft has also increased from 36,734 to 38,236. We need to understand what the overdraft limit is and how to close the company. We need to understand how the overdraft limit is and how close the company is running to this limit throughout the month. Often, the most difficult time of the month for cash is not the last day of the month. For example, it might be the day wages or payroll taxes are paid. So we need to make sure there is a buffer of cash in the overdraft. A useful measure here is to see if the overdraft is reduced to zero at any time during the month. If the overdraft for this company never goes below 20,000, then that 20,000 is considered to be core debt and should be refinanced to a business loan to reduce interest costs. GST or VAT is what we refer to as lumpy expenditure, as it's not generally payable every month. A good strategy to preserve cash flow is to put aside a set amount each month for GST and VAT, and other taxes as well. I already talked about using the bank current account for this purpose. If you talk to us, we can help you work out how much you should be setting aside each month for tax payments so that you always have sufficient funds available. Note here that the last year, the tax payable was 15,747. And if you remember, this year there's tax refund owing. By having regular updates of your tax position, large fluctuations in tax payable can be avoided, which reduces cash strain and stress levels. Just a quick note that there's a loan here for a phone. Asset finance interest rates are often much higher than bank finance. So be careful accepting finance deals on things like phones, vehicles, or other equipment needed in your business. Perhaps the biggest indication of cash strain in this business is that trade and other payables have increased from 72,000 to 111,000 this year. If we refer to the trading account's cost of sales, we can calculate that it's taking 74 days to pay suppliers on average. Last year, it was taking 47 days. Not having sufficient cash to pay suppliers each month is incredibly stressful, as well as risky. We'll look at how to calculate this soon. We can see here that the company refinanced loan 70 with loan 71. In the current climate, refinancing such as this may result in reduced interest costs. But we also need to be mindful of the legal and loan application costs. With net assets of only 2,087, the company has no ability to borrow any further funds or it will fail the second test of solvency, which is to always have assets greater than liabilities. We'll go into this in a bit more detail shortly. So with the reduction of net assets over 45,000, we need to be thinking about how we could bolster this balance sheet and reduce the risk.